Welcome everyone. This video is only for the Indian traders because most of the Indian traders think that SMC do not work in the Nifty, or you can say the Indian market. In this video we will analyze the Nifty. First of all, you need to decide your time frame because it depends on personal choice that which time frame you want to trade. Like this is the Nifty chart in the 15-minute time frame, and because market opens for the short time in a day, like only 6 to 7 hours, so you can use time according to your choice. Like you can use the 5 minute, 3 minute, or even a 15 minute, because market structure works in the same way in all time frames. Now most of the traders trade in the 5 minute or a 15 minute because they are intraday traders. So we will also analyze the Nifty in the 5 minute time frame, and we may see the entries in the 1 minute time frame also. Now how you can see the smart money concepts. First of all, the very important aspect of smart money concept is your structure. Like if you don't know the direction of your market, then you may be taking the wrong trades. Like market creates higher highs, something like this. It doesn't mean that market is bullish and is creating the breakout structure at this point. And you should buy on the order block because you have learned something about the order block, that the last down candle before the up move is the order block. This is not the way SMC works. Now because most of the people think that the order block is SMC, they get trapped by the market because market may have created the order block at this point. It may also have created the order block at this point or even at this point. So you have to be careful. Like in the SMC, we can see that not every high break is a break of structure and not every low break is a change of character. Now when everyone is looking for the buy on the order block, which is at this point, then this order block work as a liquidity or a trap. Market fails it, tap on another order block and moves to the upside. Now when we should look for the order block, whenever a market took out the liquidity, like this low is the liquidity, because many people have put their stop loss just below this point, so this is the liquidity point. And whenever market took out the liquidity, which we also call it an inducement, then we can look for a buy on the order block, order flow, or a imbalance, or you can look for a buy on the extreme order block. And this is the only thing you need to know. Now first of all, we can start from any point. Like at this point, as you can see that the Nifty is falling to the downside and its structure is bearish. Now again, as you can see that market creating lower lows, this was the first low. Market took out the liquidity. Now market can drop to the downside, and when market can drop to the downside, market can drop to the downside whenever market take a tap on the higher time frame POI, or you can say the extreme POI. This is the 5 minute time frame. Market take out the liquidity, and where is the extreme POI? This is the extreme unmitigated order block at this point, like this. Now market didn't tap exactly on this point, but market moves to the upside. Now this is the gaps. Market may have created the imbalance at this point because there must be a third candle which is not presented here. So if there is a third candle, then this can be the gap. Like we can say that a imbalance. Market tap on this point, moves to the downside. Now it's not necessary for market to always move to the higher extreme POI or extreme imbalance. Market can reverse to the downside from the in between. That's a 50-50 probability. But at this point, market tap on this point, we can look for a sell. So what can be our target? This low can be the target. And again in the same way, we have to wait for the market to take out the liquidity. So where is the liquidity? In 5 minute time frame, there is no first pullback at this point. So we can see that market may moves to the upside, and market hasn't taken out the liquidity because we don't know what's the price action between these opening. So you should wait for the market to grab the liquidity in the internal structure. Now how you can see the internal structure? Like market is moving to the upside, market took out the liquidity of the internal structure at this point and moves to the upside. So this area becomes the breakout structure because market took out the liquidity of the internal structure and moved to the upside and create the breakout structure. Now again, as you can see that this was the liquidity point. Market took out the liquidity at this point, moves to the upside, and it doesn't close the candle below the previous major high, and then again drop to the downside and break below the this low, which is the change of character. Now you know that market can move to the downside, and you can look for the entries, because market has already taken out the liquidity. This was the last unmitigated order flow. Market tap on this point, as you can see that this little green candle, or you can see the blue candle, tap on this point, and you can look for a sell and target the low, which is at this point. Now again, if you can see that if you miss the entry at this point, like at this point, you can took out the entry while market is moving to the downside. So when you can take the entry, whenever market took out the liquidity at those points, you can again look for the entry. Now this is the only area where market took out the liquidity of the previous high. When market took out the liquidity, you can look for a sell on the single candle order block basis, or you can also look for the lower time frame entry. This is your entry, this can be your stop loss, and you can target the same low because your direction is to the downside. Now again, market moves to the upside but didn't take out the liquidity, because we don't know at this point where is the pullback. Market moves to the upside, take out the first low liquidity, because we are seeing the internal structure at this point, then again moves to the upside and create the breakout structure at this point. Now after the breakout structure, as you can see that the market again break the low, which is the major low. So this is the internal change of character. You know that the market has shifted to the downside, and you can look for a sell, and market drop to the downside. Now again at this point, market took out these liquidity points and tap on this unmitigated order flow, which is at this point, and then again drop to the downside. This is the breakout structure, and in the same way again market took out the liquidity of this high at this point, and after taking out the liquidity, market moves to the upside, but then again it finally drops but didn't close the candle below this point. So this is the not the breakout structure, this is just again the liquidity. So your liquidity point also shift to this point. Market took out the liquidity again, didn't close the candle above this point, and dropped to the downside. Now again market took out again the liquidity in the 5-minute time frame at this point, gave a reaction to the order block, which is at this point, or a imbalance at this point, then again move to the upside and close the candle above this point. So this is the change of character in the 5-minute time frame. Now in the 5-minute time frame, the direction is to the upside, so we can look for a buy. Now when we can look for a buy, whenever market took out the liquidity of the previous low, market continue to move to the upside until it took out the liquidity of this low, which is the proper pullback. Market took out the liquidity, moves to the upside, close the candle above this point, so you can look for a buy on this mitigation. This is can be your entry, this is your stop loss, and you can target any higher area. Now again market continue to move to the upside at this point. Now at this point what happens, market took out the liquidity of these lows, moves to the upside and create the breakout structure at this point. Now after the breakout structure, market didn't sustain above this point, it again took out the liquidity of the low but failed to make the high and moves to the downside. Now your direction is again to the downside when market closed below this point, so you can again sell. Market opens gap down on the next day, and again you are looking for a sell. So when you can sell, this is the liquidity, this is again the liquidity, and market again took out the liquidity of this high. When market took out all these liquidity areas, it dropped to the downside. Now again this was the liquidity point, market took out the liquidity, moves to the downside, and then again it moves to the upside. Now if market have taken out the liquidity of this area, because this is the no price action at this point because of the market closing. But if it has taken out the liquidity of this area and close above this point, then direction is to the upside, because this can be a change of character, and you can look for a buy whenever market took out the liquidity. Now this is the liquidity point. Market took out the liquidity of the previous low and market moves to the upside. In this way, market continue to work in the same way. Like, this is the current price action. As you can see that how you can take the entry, we will only see the one example at this point. Now market at this point is creating the higher highs. Like, this was the pullback to the upside. So where is our liquidity point? The real liquidity point is at this point. Market took out the liquidity, so we can look for a buy. Market moves to the downside and then again mitigated something to the downside and moves to the upside. Now again, this point is the break of structure in the 5-minute time frame, but market didn't close the candle above these points in the healthy way. Like, again, at this was the high, market didn't sustain above this point and moves to the downside, took out the liquidity of this low and moved to the upside, and then finally dropped to the downside and open the gap down. Now how you can take the entries in the 1-minute time frame? As you can see that market took out the liquidity at this point. Like, at this point you can look for a buy. So when you can buy, whenever market break above the first pullback. Suppose this is the first pullback, market break above this point, and you again have to wait for the market to take out the liquidity in the lower time frame also. Market took out this liquidity, then you can look for a buy. Now whenever market took out the liquidity, it's not necessary for market to tap on any of the unmitigated order block. It can reverse from the imbalance or even from the order flow. And at this point, as you can see that this was the imbalance, market tap on this point, created a single candle order block. To be honest, I don't want to take entry at this point, but if you are aggressive trader, you can look for the entry at this point, put your stop loss just below the low and target the major high. At this point, market give you the entry, give some profits, then again faded it. Now as you know that then the 5-minute time frame, the structure is still bullish. You can again wait for the market to break above the first high, which is at this point. So this point is the change of character, and after the change of character, you have to again wait for the market to take out the liquidity. And as you can see that this is the price action, and there is a no liquidity area where you can take the entries, and market moves to the upside. But on the next day, as you can see that these were the lows where there is a liquidity. Market took out this inducement, tap on this unmitigated order block, or you can see the imbalance. You can look for the entry at this point, put your stop loss just below this point and target the high. In this way you can take the entries. Now if we look for the current price action, market took out the liquidity and it already created the change of character above the 5-minute major high. So this is not the valid trade condition for us. I hope you learned something new from this video. Please make sure to like and subscribe this channel. Thanks.